Hey, I'm Maciek Zaremba with Keller Williams, and I am here with Chris Kouvatsos with Bank of England Mortgage, and we're here to talk about what is it like for the retirees moving to Florida that are considering buying a home and financing part of the purchase.
Sure.
So let's talk about that, Chris.
Yeah, I get a lot of clients, especially Florida, because we have a lot of second home people here buying second homes and primary residences, especially since COVID. With all the openness that Florida's had and the sun, right, and the beaches, people are just trying to find a place to escape. And once they come down here, if you ever come to Florida, you'll realize, especially our little beautiful Sarasota area, why they're doing it. So it's just a little hidden gem. But it can be challenging if you're of retirement age, still working and of retirement age, and trying to move to another state, because the first thing you think about is how am I going to qualify for a loan, right?
Yeah. Well, let's talk about the people who are retired first. Okay. The ones with no income from a job.
Sure.
Per se. Okay.
So most of the time when people are retired, we'll assume they're all of Social Security retired age, right? Because so they can start receiving their Social Security benefits. We can qualify on that. That's number one. We can qualify on pension. Those are two pretty straightforward things. They're guaranteed income, right? I know you're going to be getting your Social Security. It's every year at the beginning of the year, you get a letter. It says you're going to be making X. Yep. Cool. I use that. Same thing with pensions. You either got a letter at the very beginning, or you get a 1099 each year that says you made X, or a award letter, however that comes. It's guaranteed.
Does disability also fall into that same umbrella? Okay, let's skip it.
Disability is a different thing, because we have to make sure that everything that we qualify is going to continue.
Okay, gotcha. Okay. So retirement will continue and your pension will continue. So if someone is moving down to Florida and they want to purchase a home and they just don't have 100% down, they don't have the cash. They want to finance part of the purchase. They have Social Security and they have a pension income. Does that usually is that enough usually to qualify them for a home loan? Let's talk about that.
Yeah, it actually could, right? It could. But what we find is that people that have these pensions coming from the north, there's a really interesting thing that happens. I've done many, many loans here in Florida, and Social Security is something I want to just touch on real quick. Yeah. I've qualified many of my borrowers on Social Security income, amongst other things. But what I've noticed is that people coming from the north, their Social Security income is substantially greater than most people in the south. Mm-hmm. Why? Well, people get paid more in the north. People make more money in the north. Yes, living expenses that's not the question, but you usually take pay cuts coming to Florida, right? Yeah. So when you're paying Social Security, it's based upon your yearly income, what you're going to be getting later in the future,
so
right?
What you've paid in.
What you paid in is what you get out later, right? Okay. And if you don't pay anything into it, or less or nothing or little, you're not going to get a whole lot of Social Security when that time comes. Okay. So people coming from the north, $3,000 a month in Social Security income, where, down here in Florida, sometimes it's like 15, 18, and it's like different. So that's one thing, right? So people coming from the north typically have stronger Social Security type income. So that's always a benefit. But a lot of the jobs up there are union, are long-term jobs. It's a different kind of market up there where people have stayed with their businesses for a long time. So they receive these pensions, and typically they've probably had some kind of 401ks, IRAs. And that's kind of where I was heading with this, is what does that asset look like as income in retirement, right? You pay all these money to something, and you're going to just get money back at the end. Well, it can actually help you with a mortgage. If you're of retirement age, actually you can draw on an IRA and make it monthly reoccurring income to help you qualify for a mortgage. So you could have somebody that just has, their $1,800. This actually happened. I had a guy that he had a really great credit score. He was like a professor at multiple different, or I should say like a dean at multiple different prestigious schools, had millions in IRAs, but his income, truthfully, on paper, was just his Social Security, which was about at the 20, just high twos, right? Whatever that was, right? And this is a guy that's like, why don't I qualify for a loan?
Yeah,
I'm over here like
being worth millions of dollars. You would think you would qualify. Yeah. But once again, we're back to repayment ability.
Repayment ability, right? So the thing that he could do, and what I instructed him to do, is to set up a monthly recurring distribution that would be in the amount of X, and that would allow us to qualify him for the loan. So we do have options for you guys, retirees. We can set up these disbursements. So some people, that have these IRAs are already taking their RMD, the required monthly distribution, right? And so they know what they're getting because at a certain age, I believe it's 70, don't quote me on that one hard, I've got it just off the top of my head, they have to start taking money from their IRA, right? And it's a set amount based upon X, right? So they're already doing that, but you can up it. You can call, you can up it. And so sometimes we have to have that happen during our loan process where we have to call whoever's managing it. Sometimes you manage self-manage, but whoever's managing the IRA, hey, listen, we need to up that withdrawal to this number so that we can qualify for the mortgage, right? And as a lender, we're just looking at a 3-year continuance. So whatever I'm having you withdraw, I have to make sure that you can get that withdrawal for 36 months. There's enough balance that if it's $10,000, $360,000 at the end of that 36 months better be in that account. Otherwise, I can't do $10,000, right?
Yeah.
That does not mean you need to keep it for 36 months at $10,000. That just means that we have to see one distribution and make sure that it can last that long if we're going to use that amount to qualify. So that's just one avenue that we can go down, and it's we get a little people that balk at it. They're like, but once you just say, hey, listen, after closing, if it's your choice to shut that down, that's on you. If it's your choice to return back to what you were paying, that's on you. I'm not saying that you have to keep this forever and ever. Life happens and changes happen, and you can make those changes accordingly. But for this loan process, this is what we have to do. So we'll do it, and we'll get you into that house. And it is that easy. It's a phone call. Probably within 7 to 10 days, you can have the money in that first distribution into your account. Show me that bank statement where it came from, the deposit, bam, bam, bam.
All right, Chris. So what I'm hearing is that retirement income is a great qualifier for loans. If you're going to be moving down to Florida, what's the first step someone should take? Is it call the lender? Let's see what's going on?
Always, cart before the horse, right? Cart before the horse mentality is, you want to go buy something and you don't even know if you can afford it. What are you doing? And in a perfect world, everyone should go to the lender first, and the lender should be able to be like, Maciek, I have this well-qualified individual who is able to purchase a home. Here you go. Perfect. And then you go out and buy your home. And what happens is it's, Maciek, I want to buy a house. Let's go look at a couple houses. Well, while I'm getting pre-approved, and then all of a sudden something happens, and you either aren't pre-approved fast enough, lose the house, especially today.
Yeah, that's right.
That's the biggest thing, is that you're not taking the steps fast enough, and you're just watching things click on and off the market in hours time, and you're just you're late to the party.
That's right. Like really, all you should do if you're considering moving to Florida, all you should do is call. You can call me, but you should really call Chris first, because he's going to help you see, will you qualify for a loan? What are the payments going to be? Yep. Do you need to make any changes ahead of time? That might take 1, 2, 3, 4 weeks to kind of update the system before you will qualify. So Chris, how do they get in touch with you?
Oh, super easy. My cell phone number, which I'm sure Maciek will post for me, 941-806-7625. That's the best way to reach me. Call, text, 7 days a week. Maciek, also super important to know too, if you're leaving Florida, I can help you get qualified for where you're going. Okay. I can do loans in all 50 states. So if you're working with Maciek and you're gonna be selling your home and moving to New York or whatever other state you might be moving to, we can get you qualified before you list your house to make sure that you can in fact do it.
Yeah, you know what? I'm so glad you mentioned this. Yeah. I thought we were signing off, but hold on. There's a whole new conversation here. Okay. That's extremely important.
Yeah.
And that's the conversation of, I want to buy a house. I need to, maybe downgrade, or we're empty nesters and get something smaller. So I'm going to list my home and I'm going to move to Florida, right? And what happens sometimes? What happens is the lack of preparation gets you homeless. Okay?
Yeah.
So what could happen with this example that I'm using here is that you list your house with your agent or in your state. And it goes under contract in 1 weekend, because that's that's the state of the market across the whole nation right now. So you are under contract, you get on a flight, you call me, we go and start looking at properties, we identify perfect properties for you. You're going to have your maybe 30% down payment from some of the proceeds of your old house.
Sure.
And then you go talk to Chris or you talk to a different lender. It doesn't matter because they have the same underwriting guidelines and you will get the same story from everybody.
For the most part, right? I mean, all lenders aren't created equal. Some of them do have overlays,
That's true. No, it's about the creativity. Sure. That's really important.
Yep.
And Chris's creativity is going to come out and basically say, hey, did you know that you have a misreported item on your credit report? It seems like there is an old credit card from 2004 that is reporting a $1 balance late for 10 years. So at that point in time, your credit is shot and you didn't even know it.
That's real.
And it could be that you're using Credit Karma to track that client. You are using Credit Karma to track, but that's only getting information from 2 credit bureaus. But then the third one might actually have an incorrect piece of data.
It can happen.
And now Chris runs your report because you filled out your application. Everything looks good until that report comes back and they see, look, 2 credit reports are good. And now you have a third blemish. And how long does it take to fix a blemish? Well, an incorrectly reported blemish, it's going to take 1 or 2 months. Sometimes more.
Let's talk about blemishes if you want to go there real quick. If you missed your car, this is a prime example. There's a local bank here in Florida where you still have to go into the branch to make your car payment.
Wow.
They do not do online payments.
Wow.
There's no over the phone. You literally have to go every month, go to a teller, make your payment. And I know this from experience. One of my clients did this, and they accepted the payment, but something happened, and they reported the late. The payment was there, whatever have you. They reported a late car payment.
Yeah.
Okay.
Holy.
1 year later, still affecting them. 1 year later, that car payment it affected them, that 30-day late.
Of course. 30-day late changes your credit score.
And you might be able to call and, fix the 30, get your balance current or whatever, but those types of things could, hurt you or haunt you later in the future.
Yeah, right? So before you do that whole move and list your house wherever you are, first call Chris. Because Chris is going to be able to double check, are you already well prepared to make that move?
Yep.
Listing and selling a house is very quick nowadays.
That's right.
Finding a house takes time, but fixing credit is the longest part of that whole equation.
That's right.
And you might have something on your credit, or you just might have something that you need to just tweak a little bit, like your distributions or something,
income,
right?
Something, it doesn't even matter. It could even be we'll call it vanilla easy, but it's still worth it, right? Just to have that peace of mind. To be like, this is going to be easy for me. I'm going to do this. So let me just make the call.
Yeah, exactly. Now, I'm sorry to interrupt here, but one thing that I've seen recently, which it drives me crazy, but once in a while, clients come in with a pre-approval from their home state, someone that can write in Florida, they're licensed in Florida, and they have a pre-approval. And then what we find out a little later is that pre-approval is garbage. And the reason we find out is because the level at which the pre-approval was done was very, very minimal. And that's okay, because to write a pre-approval, it's like Control P, you print and you're done, right? That's how easy it is to actually do it. However, that's not a real pre-approval, right? So when you call Chris, here's what I can tell you from my personal experience, because we've been working together for years now. And here's what I can tell you, is that he's not going to let something weird be okay.
No.
Everything is going to be explained. Everything. If you are trying to hide something, it's going to be found way before we even start shopping for a house.
Well, and truthfully, talk to me about it. Let's see what we can do to overcome these
exactly.
things.
But a lot of people just hide things. They're embarrassed about the reality.
That and, lenders are the big bad wolf, if you will. We're like I don't want to pull your credit. I don't want to show you my money. And for whatever reason, we just have that negative mantra towards us because we could say, hey, you don't qualify, right? I guess that's a big thing. It is a big thing, right? So we just have this, mantra about us, like we're some kind of, evil, or we don't want to talk to the lender because we could hear the information that we need to hear, and people don't like truths.
Yeah,
right. People don't like to accept truths. So the fact that we bring truth into the conversation and reality, it's great to dream about that vacation home on Siesta Key Beach with that full frontal of the ocean, and you got the But when the reality of checks in and I pull a credit and the scores aren't there, you just crushed all your hopes and dreams, and people just don't want to face that.
And
sometimes.
here's the truth. With us, you're gonna get the straight truth. That's the one thing that I pride myself on.
Same.
In real estate transactions, full transparency. Everything. I'm gonna tell you everything you want to know. Ask me about anything.
And some things you just don't want. You wish you didn't know, like that. Like you just Of course you want to know it, but like you just hoped it wasn't there.
Exactly. And the way I see it is, if you can confront the truth sooner, then you can make changes sooner.
Yes.
But avoiding and living in this like bubble, looking like this and not looking anywhere past, then that's not going to be a good strategy for you to go get your dream home, right? On Siesta Key Beach.
That's right.
Or wherever,
The reality of home ownership is so real, right? It's and for everybody, it's just, your time frame might be different for you or for the next person, but the reality of it is time's going to go by anyway. So whether you start in this year or the next year, you're still going to be that many years behind. So it's never too late to start, and also never too early to start either, right?
Yeah.
Because even to the 20-year-old watching this right now, you might think buying a house is something that you may never do, or the 60-year-old who's never bought a house, same thing. Like you never be able to do, but the reality of it is, some way, shape, or form, it might, it's going to be possible at some capacity. Like I just have that kind of mindset that we're going to do this at some capacity.
I guarantee you, if you think you cannot buy a house, call me, and I guarantee you we will make a plan for home ownership. And the reason I feel so confident in that statement is because I've done this dozens of times for clients. I have put them on a plan, a monthly follow-up call. Did you do what you said you were going to do last month? Because those are the steps that are required to get to home ownership.
That's right.
And we follow up every single month, and sometimes it's just 2-3 months. Other times it's 3 years.
Yep.
And it can be 3 years depending on your situation. So if you have a question, please give me a call. You could also drop a comment below.
For sure.
But my phone number is 941-400-7084. Just give me a call. Let me know what your question is. I'll be glad to talk to you and educate you. And Chris, how can they reach you again?
Yep. Best phone number, 941-806-7625. Call, text, weekends, nights. I'm available if I answer. We'll get to the bottom of whatever we need to do.
Excellent. Chris, thank you so much.
Appreciate
Guys,
it.
thank you for watching. Please click that like button and subscribe if you want to learn more.
Thanks, guys.